and this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show, where we look at what happened in the market during the day and learn from it and try to come out with a better trade plan for the next day. And this is for the monthly expiry January 25th, Wednesday, truncated weekend tomorrow. It's 2023. And what kind of day we had was, it was very volatile, and but at the same time close flat, and it's consolidation that's happening overall, and it was a bear trap day as well. Let's get into the details. Let's see the charts right away. Here we have the weekly chart, and let's look at that quickly with I'm trying to understand and get a picture. Yes, here we are. That's a trend line up there. From here we have broken out multiple weeks, hit the all-time highs, and then retraced completely, and then after that for the last 4 weeks doing nothing. The fifth week, same thing here. We have the trend line out there on blue, and we had broken out, retraced and consolidated, and then doing nothing much. Are we going to break out from here, or are we going to come back? And then something has to happen, right? Because it's been quite several weeks since this is happening, and probably the budget that's coming in after 4 trading days would be the deciding factor for this. But we would mostly be focused only for tomorrow, today. This is a daily analysis show. I'm sorry that I could not make the video yesterday because I had some personal emergency. So going ahead also, I would like to restrain my daily videos to just one in the mid of the day, mid of the week. I mean, one in the expiry and one in the weekend. That's what, and another one in the Saturdays. Which is not a daily analysis. This stock analysis outside of the daily study. So that's why I'm planning to hit a lot of because I'm not finding enough time to take up the additional content and additional content related works and a lot of things under the planning, and so 2023. So you may see the changes in the coming day, but weekly analysis would always be there every week Sunday, and before the expiry day analysis also would be there. Right, expiry day, pre-expiry. So tomorrow we have expiry, and here we have, look at this Nifty candles, and we have a bull trap day. The price went above the previous candle's high, which was a dodgy, and then it trapped all the bulls who wanted to go long, and then finally ended flat, exactly 0% move, absolutely flat. What Nifty has, what Banknifty has done, and also trapped the bulls, giving the impression that it's breaking out by moving above the price of the previous candle, which is kind of a spinning top on a small body, and then it made a wide range bearish candle that completely engulfed the previous candle. That's making it even more bearish. When the preceding candle completely gets engulfed, then then that's a strong indicator of bearishness to come. Right, on the time frame basis, of course, it's a daily time frame, so the intensity of the bearishness will be accordingly, not as And here we don't have the bearish wide range candle engulfing one, but that flat close is what's happening, right? That's the price action. Remember, we are in a major support zone where a new swing low is made from the price action point of view on the Nifty, but Banknifty has not, although it has retested the support zone multiple times, it has not made a new previous swing low on the price action. So all eyes on this swing highs at this 43,500 nearby zones, and at this 18,260 levels, and above that 13,420 kind of levels is where the new price pattern could emerge, where the all highs would get beaten. Then we can hope. Until then, we don't know what will be happening. Look at this Bollinger Bands. It's absolute consolidation of contraction or sideways movement is what is happening on both indices now. Completely confirmed. Pure sideways price action. Look at the Bollinger Bands that are skewed and then straightening out. It's neither moving up, neither moving down. It's pure sideways is what Bollinger Bands indicate. But it's got a bullish bias also because its price is above the 20-day moving average, which is the median of the Bollinger Band. So bullish biased consolidation is what is happening as indicated by the Bollinger Bands. Let's summarize what we lost. We didn't lose anything, just 1 point down. So it's a bull trap day bearish candle, and Nifty, that's what we're seeing. In Banknifty, it's also a bull trap in the wide range bearish, and it's engulfing, it's even more bearish. Intraday price action is very interesting to see. It had a gap up, and then it just trapped. That's how you'll see how it got it trapped. It gapped up nearly 0.5%, and then points more than that, 0.6368, nearly 0.7 of downfall happened, and then it attempted to move up to the end of the day, but didn't sustain, not even half what had fallen. That's what Banknifty that you're seeing. It's actually 1% fall from the top, and it's 0.75% up. Here it's a half a percent up, and then it's a 0.7% downfall. So that's a kind of, it's downtrending, but that is after trapping. That's the beauty of the price action that happened today. Right? You clearly see that. Look at the so a lot of other things in this interpretation. It's a lower low, lower high pattern. That has to breach before you think of longs. It could form a new lower low in the Banknifty. Nifty is already formed. We are testing the same support zone. Right? It's in a line of a head and shoulder pattern. At the same time, it's a descending wedge. Reversal zone. Also, at the same time, it's a crucial support on the weekly charts. From where it had broken out earlier, and all this is true. So all eyes would be now at that confluence of the support zone of the Fibonacci trend line, moving average, changing polarity bounds. All that is coming at that same zone that we are talking about. If this zone is broken, let's say the 17,750 kind of zone is broken, then we can be confirmed. Until then, we don't know what happens. Even if it moves up, it has to move above this 40,500 and the 18,300, 420, 450 kind of range has to be taken out before we can say. Until then, we just keep on hold on, but it can't last long. Consolidation cannot last for months. Normally it doesn't happen that way. It would it would be very volatile between that range, but it would it won't last. Now that it has been through, it won't last normally for so many weeks. It will give some result. The budget is coming in another 4 days, so that could be the trigger that could give a clear answer, right? So levels 18,142, 18,203, 18,262. That's the levels that you see of resistances on the previous highs. Right? On the Nifty, 18,385 is the Fibonacci 3 retracement resistance that you can see above that. Downside 18,070, 18,000 rounding number. 18,070 is kind of Fibonacci 38 retracement level. So previous swing low. That's all support zones that you're seeing. There is 959 also is previous swing low. It can be also a good support. 950 2833, 43,000 rounding number could be a resistance on the upside, and 43,339 after that. Downside 42,566 Fibonacci 23 retracement would be a support, and 42,363 and 42,231 could be swing low support zones on the Banknifty. All demands we have clearly seen what it's saying. All demands and the momentum is clearly sideways, right? And there is a falling strength in Nifty and flat, almost falling in the Banknifty. That's what momentum. So momentum to bullish divergence still there. On the daily charts in the Banknifty, it will work out. Trend is, it's bullish. Actually, it has crossed down, but it's weekly bullish. So weekly bullish trend and sideways momentum. So kind of flattish trend and momentum is what you see. Flattish Bollinger Bands had a great support. So it's a summary of the price action and different indicators. Right. Let's look at the India VIX, which is flat spike, flattish day for 13.65. Nothing which is happening in the VIX. But the open interest has turned, all the futures has tended to short up on both indexes. That's up to the issue and option. So tomorrow is a monthly expansion, very volatile. The levels seen as of now with the highest put and call writing is seen is 18,000 as well as 18,100 as well. The highest number of put writing, and 18,200 is where the highest call writing is seen. So there would be a big turf that may happen tomorrow for Nifty. Those levels from the options are high. Right? Monthly expiries are usually more volatile than weekly. 42,500, 43,000 is where the highest put and call writing is seen on Banknifty for the Jan 25th tomorrow, Wednesday 2023, and put call ratio it's closer to the not bullish enough is what I would say. Is 0.67, 0.71. It's not bullish enough. Right? That also is a sideways PCL, right? So everywhere sideways, flattish, not able to have any direction. That's what we are seeing. All indicators, all data, all open interest, everything is showing the same. As far as today's price action, the industrial sectors watch. If you see the IT is 0.77% up, FMCG up, it's flattish 0.14 only, 1.28 good up in the auto. That's how these are the three major sectors that managed to close green. But what went wrong was realty and metal and the pharma. They all closed. Right? Near to 1% of fall has happened on these three sectors. Right? Ideas having bullish momentum, the same reality is having a bearish momentum on the short term. We're talking about daily charts, right? All other major sectors other than the IT and the reality, they're all having the sideways momentum as of now. Industry heavyweights, the 7 heavyweights are largest contributors to the index. The HDFC 2 is doing well, and it's a bullish at 1 point. more than 1% of good up moves happening, and it's a breakout of a flag pattern, and but it's at a very crucial zone of resistance in all-time high levels. If that is breached, then it's good. If we also did close green, TC is also good. Close green 0.63% of it. So apart from the HDFC, Twins, and the IT stocks, what went wrong was in the Kodak Bank and Reliance and ICICI Bank. They have been doing very badly since long. Kodak 1.32% down. Reliance again falling half a percent more than that. ICICI Bank is kind of flat, but right. That's what is happening. From the momentum perspective of short term, HDFC Twins and TCS is having bullish momentum. Kodak and Reliance, these two, heavyweights are having bearish momentum, while all the other out of one more so that's having sideways momentum. That is stocks that's having sideways momentum. Is what it is. So what you can understand from the industry study is that it's a mixed bag there, right? You know what is doing good: FMCG, IT, defensive, auto, is not doing good, or others, metal, pharma, fertilizers, seasonal pharma is defensive but still not doing good. Reality. So it's a mixed bag with respect to the performance, but heavyweights. We have trouble in the Reliance, and that's what you normally holds the banks. It holds the index itself, right? Trouble with Reliance and ICICI, that's what is pulling down. So heavyweights are selling is very clear, as heavyweights are getting sold by their Fyers normally. That's what is happening. So look at the heavyweight selling that happened. 760 crores of selling continues. It's only 1 or 2 days of buying that happened. That ruled as quarantine in the last 20 days if you see of the foreign institutions. But those institutions are brought, they're buying in anticipation of the budget, probably 1,144 buying has happened, so they have been buying since long. Ever since the FS has been selling, they have been buying. It is only the institutional money or retail money that's holding it. That's a fact that we cannot deny. But in order for the market to break out, we would definitely need the foreign institutions to pull in money correct. So all eyes on when that would happen. That's a period of the time when now the markets will be short. Until then, we cannot see anything more than the sideways movements of moving one day up, one day down. That's the max that could happen. If you're looking for a rally, you should look for when it finds a buy. In a nutshell, right? So crude oil is rising again. It's a trouble. It has reached the 82 kind of level. So it's rising green day again. It's in a parallel channel. We had seen the chart stability, and then it's moving up. And you have to be cautious. There's a chance that it can move up. The momentum is almost there at the bullish side. Sideways, and it's rising in almost getting into the bullish zone. So you have to be cautious on that. But as long as it's below the 90, it should be okay for us. As of now, okay. Dollar index is flat and it's having bearish. It has been falling. Rand 2 is where it is, but USD now also is rising and flat and falling, but not much. 81.5 is not too far from 83. So rupee is not depreciating enough as we actually considering the fall of the dollar index, although it's not directly correlated. Right? Look at gold. Gold is spiking up again. Gold spikes up when the market falls. Gold spikes up when people have worry of equity markets and shifts the money as a hedge into the gold. So more investment going there, and gold is shooting up at the top of the channel. Cup and handle pattern, handle part is what it is, and if it breaks out, it could be called hitting the all-time high very clearly. So that's the news on the gold commodity, right? Now, SGX, the Singapore exchange, closing green, US indices is falling, is kind of red. So one thing you have to make a note is the US indices, so major indices that we track is Dow Jones, S&P 500, and the national. They are all at the top of a descending wedge, and it had given the impression of breaking out last week and then failed and then fallen down, and again it is taking a support right below and then not ready to fall down, neither is it able to cross and break out. So all eyes will be on that. We have seen that all of these have a descending wedge pattern, and any big moves that happens obviously would reflect in our market normal scenarios, but it's not mandatory for that. Tomorrow is an expiry, so the expiry day, so the local queue should be, and the option expiry play would be what may be happening than the US indices, but that's something that we'll keep watch closely. US indices and global indices as of now. It's not ready to fall, neither is it breaking out. So momentum also is sideways if you see all the US indices, right? So major events are coming. Is the GDP data job start is coming on Thursday. It's on Jan 18, Jan 26th actually. Right? That's the Forex reserve data of India is coming on Jan 27. So major event is what next week. It's February from Dynasty. The budget of India is coming, and then that could be a major event, and it could be making markets very volatile. I'll stay out of the trade if you're not a professional or have completely hedged risk-defined strategies, and Because finding the direction is not in our hands, right? It's very difficult to find a direction budgets. We have to anticipate such strategies where you're, either direction if big moves are happening, like strangle or a straddle on the long side. Long straddles and long that could work. Right, so, but yeah, so we can have a separate video on that. What strategies we picked, but that's for the next week, not this week. To stock this HDFC Bank and persistence system, let's look at the charts quickly. HDFC Bank. Here we have the breakout that's happening. This is daily charts. For better clarity, you can see the weekly charts, and you can clearly see it's a flag pattern breaking out, comfort. But look at this. It's a peer zone, until 1726 is clearly taken out, in a proper way, candle by candle. If that is not happening, we cannot be sure of this, right? But this is clear breakout. Look at this momentum. Momentum is bullish. There is a divergence here, and it played out and met the target also. Now, all eyes will be on the all-time highs. If we can take a bet with the stop loss and low of this candle, we can take a bet. Even now you can take a bet, and but stop loss has been very tight just because of the fact that look at this trend line. This trend line is very crucial. It can once again fall back here, but price pattern is clear, is bullish, momentum is bullish, trend is bullish, no doubt about that. But it's a very crucial bear zone from where it had already. I attempted it and broken down, so you have to be cautious on that. Now pick for the next week, next day. I mean, it's IT stocks are doing good. Personal systems is having a breakout, clearly seeing it's a haunting pattern and a W breakout, and also Bollinger divergence, volatility, Bollinger Band divergence, volatility outside inside pattern with the W double bottom breakout clearly seen, but you have not a high very close by, so trail it from there on, but it could definitely go to the 4972 levels. And the most interesting thing is the volumes that is having a huge spike of volumes it's seen, which is very positive, which gives impression that this breakout could really happen, right? It just negated the divergence, that is the negative, that one is negated now, so it could give some trades, right? So persistent systems and HDFC Bank long trades for the next few days. Swing. Now January 25th, Wednesday, expiry day, monthly expiry. Let's just summarize from all our studying what happened today and what is exactly happening, what could happen. What happened today is very clear. So trap the bulls again with a bearish and very volatile moves and a flash close. It means it's doing nothing but consolidating, and it's 6 days since 18,000 SL in the Nifty. So all eyes would be at that crucial support zone from a direct broken out, and then from there very close by where we have come back and settle. So that support zone of 17,750, that zone, if that is breached, then we have trouble. On the median time we are talking about. So view. Prices at the morning average just managed across 20 DMA, and holding the match is sideways, momentum is sideways, trend is weakish sideways. Fyers selling not that big, but selling. That's all that doing. Rupee is weak. US markets very crucial zone of breakout of which is trying since several weeks and not able to do. And there is selling pressure out there, and Rupee is weak. And altogether, I still have a mild bearish view for tomorrow, right? But the levels to watch for tomorrow will be 18,000 to 18,200, 42 to 43,000, the 1,000 point range, and this 200 point range. So 18,000 will be a big fight that may happen. The market is falling down, and 18,200 also would have good resistance if it is breaking out, right? So all eyes will be there. Long term 17,500, 18,500, 41,500, 43,500 is what you have to look out for now, right? So because a lot of confluence of support is there down there, we know, so that may work out be good in favor. So absolute consolidation is what is happening from the Bollinger Bands. It's very clear. There is no, till now there was a doubt. One day it is Bollinger Bands expanding, one day it's contracting, one day no. So now it's very clear. It's absolutely consolidating. Now, how long it will know? Let us see. So there could be big volatile moves within the band. That's what we have to anticipate. But yeah, big moves can happen only in budget day. So market may be consolidating and waiting for that news to come out and then burst out. So big moves are for sure in the budget day. It's a major event, and you cannot predict the directions. As I said before, go for some strategies like long strategies and all that, where it will go big moves either side. It will not slay at no direction. It will do that. So market is probably consolidating just before that. major event. Once that is done, market must stabilize and then take a direction is what you can anticipate up this time. That's it. My view is money bearish conditions for tomorrow as well. And levels of the next expiry volatility and all the details are already given. Yeah. So if you have not seen that, remind and then watch this video once again, and then things will be clear in written format if my voice is also not clear in case, right? So that's a summary of what the analysis is, and I hope this has helped in some way to have a better clarity in the market and a better trade plan for the next week. If it has helped you in some way, please subscribe if you're not subscribed and watching this, and please share to maximum people so that you can few subscribers more. We have very low subscriptions and I appreciate your help in this regard. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.